This strategy is a very simple strategy. First of all, I like to begin doing my analysis starting from 4 hours. Now, after I've done my analysis from 4 hours, I'll scale down to 1 hour to know the current situation of the market before I finally go to 15 minutes to execute. Now, let's go to 4 hours time frame. So this is Euro USD for us. This is a current market. I like to do my analysis with the current market because this market is very dynamic. It changes every now and then. This is our current resistance. So I like to put my line on top of the wick. This is my resistance. Then I'll look for the lowest range and put my line. So you see this market is trading from here to here. And you can see there's a break of structure right here. The way the market is currently, this is a good place to enter for a buy. Why? Because it broke structure. It broke structure to the upside and it has already done retracement. Once a market have more than 3 candles closing below each other, then is a sign that the retracement is over. You can see that the first candle could not close. It couldn't close below this candle. The second one, the same thing. But the third candle closed with the body below the next candle, which makes it a valid close. The second one, the second candle, has also closed below this other candle, which makes it a valid close. The third one closed below, which makes it a valid close. So what do? You wait for market to print a green candle before you can take your buy. As you can see, it didn't print green candle on this candle. This was a news. That is why you can see a big candle. This was a news that happened yesterday. So you wait for market to print green candle. Obviously, you wait after news. You don't trade when there's news. You trade immediately after news. So you see that immediately after news, the next candle printed green. So after this, the close of this candle, the next candle you enter. Is it that you wait for it? So once you enter for a buy, your target will be here. Target will be here. Your first target will be here. This is where your first target will be. Then your second target will be here. Your second target, if you open 2 positions, your first target will be here, then your second target will be here. Because the reason why you have to do it like that is because at times when market gets to this place, it may reverse and start retracing back again, almost to your entry point before. So in order not to adjust yourself with panic and waiting and all that, it's always good you take your first profit from this next high, this next target. So the second profit will be here, and after this, then we can now know what the market is creating. So that's how to get your target. And now I've taught you how to place your take profit, your first and second take profit, and how to also know when a market is done retracing. A market must close with the body below each other, like he did here. Let me mark it so that you can see it clearly. See that this candle closed below this green one, and the next one that followed closed below that red one. You can see it, and the next one also closed below it. So you can see that you have to wait for the next thing market will do. You wait for confirmation. The confirmation is that it will give you green candle to tell you, oh, buyers are already in the market. So buyers are ready to move the market. So you wait for that confirmation is so important, because if you're trading with a smaller account and you entered here saying that, oh, 3 candle has retraced back, all this can blow your account. So you always wait for that confirmation. And besides, it must not be only 3. It's minimum of 3, and it can be more than 3, 4, 5, 6 candles to confirm. But you must always wait for that confirmation of a green candle, market printing a green candle, before you can now proceed to buying. So as you can see, this was the last resistance, the break of structure that gave us this buy setup. So you see, the market is obviously on uptrend, but before it started being on uptrend, it was on a downtrend. It was breaking structures to the downside. See, break of structure. Let me remove this line. So it was breaking structure to the downside. Let me get this out. So it was breaking structure to the downside. Let's just adjust this so everything will be more clearer. All right, so you can see it broke structure to the downside, break of structure, another break of structure right there. Yeah, so another break of structure. This was the last break of structure before it turned to the upside. So after this break of structure, it now reverse, and it took out this high, with one candle. One candle took out this high, that was a massive buy. And then the overall high, which was this, it took it out, telling you that it broke structure to the downside and it took out the inducement. The low that breaks the high is the inducement, so it takes out the inducement. The moment that is done, then you're ready to enter your buy. You know, you won't have been able to enter this buy right here because there was no confirmation. So it was breaking to the downside, break of structure, break of structure, break of structure. But the moment it didn't break this structure and it broke the high of it, is a signal that we are shifting from selling to buying. So what you will do is to wait. Forex trading is a waiting game, so you wait. All this buy, you're not involved because it hasn't given you confirmation until it takes out this high. This is the resistance, this is the valid resistance point that once it takes it out, you're ready to enter your trade. So once it takes this high, which it did here, you wait for retracement before you can begin buying. So this is where is either you use your Fibonacci retracement to know if the retracement is over. So you bring it out from the lowest point to the highest point right there, and then you see that it has already retraced to the golden zone, which is 50. It has already retraced. You see, the first retracement didn't get to that 50, so you still wait. You wait for it to get to 50 before you do anything. So because at times it can retrace below 50, it can even retrace up to 61.8 or even at times 70. So you wait from 50%, then you wait for confirmation before you enter. So you see, this one retraced up to 50% before it started buying. And following the other method, which is looking out for a candle that closed below each other, 3 candles or more, you can see that this candle closed below this one, and this other candle closed with the body below this one, and then this one also closed below this one. You see, it closed here and it printed this. So you can enter right here if you have a large account that can sustain, because once you enter here, your stop loss, if you enter here, your stop loss will be here. So you put your stop loss here, because if you put your stop loss immediately below it, it can take you out. So you put your stop loss in the next, there's a fair value gap here. You can see that there's a fair value gap right here, and the moment you tap on it, boom, it started buying. For you to be free from any form of loss, you have to really wait. And is it that you, of course, you use your fib retracement tool to check if the retracement is over, and then of course you mark your fair value gap to see if it has tapped into it. These are all the confluences that you will use to determine your trade. So once all that is checked, then you can enter your trade from here. The moment it prints this green candle, you enter on the second candle. Always, once you do not enter on the second candle, then you have to wait for another retracement before you can enter. Otherwise, you're putting your account on danger. So it's always better you enter on second candle, which if you had entered here, that's a safe trade. This would have given you 112 pip. Of course, first target will definitely be somewhere here, which is 88 pip, because the first target will be here, then the second target will be here. At times markets do not get up to here at times, but for you to be on a safe side, you have to set your take profit on a safe side, which is here, the body of the candle. The body of the candle is the first target, then the wick is the second target. So you see that the moment it breaks again structure, it broke to the upside again, then you wait for retracement. You wait for that retracement, and then when you use your fib tool again, you will see that this market has really retraced. You see, this one retraced below 50%, almost getting to 61.8%. So this is a good sign that the retracement is over. So what do? The moment the retracement is complete, you enter, and of course your first target is the body of the candle, the second target is a wick. So when the targets are hit, then you wait for another retracement, or wait to see what the market will do for you for the next move. It can retrace and move up, or it can retrace and take out the low. If it takes out the low, the current low, then it means that the trend has changed from buying to selling. But if it breaks to the upside, if it retraces back and it did not print like it did like this, you can see that it didn't print. The moment it retraced back, it printed a green candle signaling that it's still gonna buy. But if it got to this place and takes out this low instead of going up, then it shows us that market has changed bias. But currently we are still on buy, so the market is still going to buy up until here. And of course, today is Friday. It may not really get to this place by the time market closes, and when market opens on Monday, it will continue. But if it happens to hit the target today, fine. But if it did not, then on Monday we will know the fate of the market. That's it from me for now. See you in my next video.